A report suggests the world's largest social networking site has so many investor fans that it could be forced to go public. In a document sent to a select group of potential investors, Facebook revealed that it expects to have more than 500 shareholders this year. That means, according to the SEC rules, it'll be forced to open its books or go public with an IPO. Now, web companies are currently scrambling to find new ways to boost profits, and here's an insight into why. According to figures from the website businessinsider.com, this chart shows how much one user is worth to the following sites. Well, it shows that on average, an Amazon subscriber will spend $189 a year. That compares with $39 for someone on eBay, an annual $24 for a Google user. Yahoo subscribers spend just $8, and wait for it, still double the $4 a year for a Facebook subscriber, although many analysts do expect that figure to rise over time. But it shows the value of each of the subscribers to those sites. Our next guest describes Goldman's investment in Facebook as a win-win situation for both companies, and let's find out why. Kerner is the Vice President of Equity Research at Wedbush Securities, and he joins me live from New York. Thank you so much for joining us. You must be rather pleased with your forecast, because they're all coming true, aren't they?
Yes, Facebook just continues to outperform, and Goldman's investment in Facebook is just another validation of the fact that Facebook is the most transformational media company of our time.
You expected this to happen, basically, didn't you? That it would be worth this amount of money, which therefore would lead to investment.
Well, we've been tracking Facebook for a long time, and their growth has really been unprecedented in the history of the Internet. And we know that monetization of those people comes with time. We saw your chart that you just put up of only $4. That's a number that's going to grow significantly over time, as well as their user base. Even though they're at 600 million members today, Facebook is really aiming for ubiquity. And there are more than 2 billion users on the Internet today, so they still have a lot of growth in front of them.
But when we look at the Goldman deal, it puts a certain value on Facebook, which lots of people just do not understand, because if you look at the profitability, it doesn't measure up to that. And we don't want to go back to the 90s when you had all of these internet companies being valued based on what they might earn, not what they are earning. So aren't we heading for a fall now?
Well, I think every company gets valued based on what they are going to earn. The only difference between Facebook and other companies is that Facebook's growth trajectory is simply significantly higher than almost any other company that people are familiar with. And so when you're investing in Facebook today, you're really not investing for the revenue they're generating today, but you're investing for the revenue they're going to generate in 2014 and 2015. And we know that they're on a significant trajectory. The problem with 1999 is we had a lot of companies who were going public and getting funded who had very little traction in terms of revenue. Facebook has very significant traction, and it's growing at a very significant rate. And when we look at transactions in the private market, there's been an increasingly liquid market for Facebook shares in the last year. And the latest transactions there have valued Facebook at $60 billion. So we actually believe that Goldman Sachs and the investors are getting a discount to where Facebook is currently valued today.
Okay, what about companies like AOL? MySpace is shedding employees, isn't it, right now? We can go back to CompuServe. There are all sorts of companies which analysts told us would dominate, would be the internet. Everyone's saying about Facebook now. Why do you think Facebook is different? We've heard it so many times before.
Well, look, I mean, you're talking like the internet is the only place where that happens. You could say that about General Motors. You could say that about Lehman Brothers. I agree with you to the degree that the only thing that's constant is change. And there could come new technologies, new companies that dislodge Facebook. But we really believe that Facebook is on its way to more than 1 billion members, the largest internet company the world has ever seen. And we've seen other companies like Amazon that you showed before, like Google, who are early leaders and continue to create significant shareholder value. And we think Facebook is in that same class of shares.
But isn't it just like a trendy nightclub in a city where everyone goes at a particular time, they're all hanging out there, they're there for a couple of years, and then they find a new club. And it's just a club. There's no major commitment to being a member of Facebook. It's not even like Amazon, where you can get your reliable products. You can leave it so easily. Why could it not just dry up?
Sure. Well, we believe that that Facebook is increasingly becoming a utility. I agree with you. I don't think Facebook is sexy anymore like it once was. But the water company isn't sexy, but everybody I know gets their water from the water company because it gives them significant utility. It might not be the only place that they get water, but they all get water from the local water company. And we really believe that the right way to think of Facebook is the same way that we think of broadband, to the degree that 100% of the people who have access to broadband and can afford broadband have broadband, because your internet experience is just better on broadband. And increasingly, your internet experience is going to just be better if you're a Facebook member. Facebook is rapidly becoming the internet passport, so it's easier to register on any site around the world just by clicking a single Facebook Connect button. Facebook is going to be a leading wallet on the internet through Facebook credits when that migrates off Facebook. You can like things on over 2 million websites, and then your friends know you like that, and increasingly that'll be searchable. And you're going to want people to search the things that you like, such that you're going to be known as somebody with social influence, because the higher your social influence, kind of the better your life. We really think we're in one of the most transformational periods in the history of media through all of social media. It's not just Facebook, but Facebook is clearly leading this charge.